What's up, guys? Welcome to the December 23 market update. That's right, the final monthly market update for living in the Denver suburbs. I am Jeremy Kane with eXp Realty, and we are going to dive straight into this month's market update as there is a ton to go over, ton to cover, both from a statistical point of view, from a boots on the ground point of view, and where we go moving forward. And that's what we're going to do for you. If you're new to this channel, first time you're watching this, I do this every single month, as well as post a video every week on YouTube. So if Denver and real estate ring a bell, or you're interested in moving here, or you live here and making a move, please subscribe and we'll stay in touch. All right, so let's get into it. Finally, we are up 16% in inventory. We've been waiting on this. The seasonality, increase in inventory has been dampened in previous months, and we're finally here. Whether that's more days on market, less buyer demand, whatever that is, we did kind of tick up, and we are at our highest point a month of inventory since 2013 at approximately 2.9 months of inventory overall here in the Denver market upon November closing. Now, with that said, a couple other important trends that we are seeing. 34% of homes are falling out of contract after being under contract, according to Megan Aller with First American Title. And so that's a huge increase than we've seen, obviously, in the pandemic years, but even more so when we look back 2013 to 2019, which we like to do because the pandemic years, especially in the Denver market, was complete chaos. And so we can't base year over year, month over month averages on that because it was such a unique market. And when we step back and really look at this year, we're talking about much less transactions. And this also could be a reason that 34% is a little bit inflated because we are having less transactions, approximately down 30 to 40% across the board as far as real estate transaction sides go. So that's definitely something to keep in mind and understand that obviously percentages are percentages, but we do see buyers kind of digging in their heels and understanding what's really going on with that piece as far as, okay, we're going to spend as much as we possibly can. So maybe we don't have enough money to make these, small inspection item fixes. We'd rather the seller do that prior to us moving in. So with that said, dropping those numbers, 40% transactions decrease, 34% fallout, what are we doing with pricing? And this is something that's extremely important because on one hand, we see our neighbor who bought this home, 2 years ago for 1.5, didn't really do much to it and put it on the market for 2.1 and wondering, oh, well, our house is that much. Certainly you did get a ton of increase in your value over time. However, each home is very unique, especially in this market. Buyers, especially in that 1.5 to 2 million market, which is, actually the coldest in Denver right now because we have the most inventory because our prices have been pushed up so much. That is a huge portion of our inventory. Definitely not average or medium, but definitely more than it has been in the past. So we have that and we see the neighbor doing that. But then on the same side, we see that 43% of homes are making price reductions to go under contract. So now it's more important than ever to have a true pricing strategy when you go to list your home, which I do. I actually don't show up to a listing appointment when you call me and say, hey, Jeremy, let's list the home. I don't show up with a pre-printed value of your home on a document that I'm going to present to you because I don't know what you've done. I don't know exactly what upgrades you've done, what upgrades you haven't, what deferred maintenance you have. And so we're going to look at the home, and certainly we're going to take comparables into perspective, but we're going to have a pricing strategy session with you. And that might say, well, we could do A, B, C and possibly get this. I feel like this, brings this comparable in, or we can do none of that. And this is the comparable that I'm seeing right now. So we can actually plan and price your home strategically so that we're not pushed with these 43%, pricing deductions, but also, that fallout rate. That fallout rate is huge because time is money, right? No one wants to go under contract, pack up the boxes and, have to go back on, unpack the boxes, restage, which, we talk about. And I caution my clients because certainly there's always a fallout rate, but 1 in 3 is absolutely larger. So we're going to sit down and have that consultation, understand the pricing strategy that we're going to go with, and understanding the pitfalls that might come along with, whatever route we go. And so that's absolutely huge when you take into this pricing kind of category, because we're seeing a ton of, movement there. And we want to make sure we're taking these statistics and actually using them for good versus just becoming the statistic on the back end. So if you're interested in selling your home at any time in the next 18 months, definitely click that link below, book a call with me for a consultation, and let's make a plan so that we're ready when you are, and we can kind of watch the markets and understand what we need to do in order to get you top dollar. Because let's be real, no matter what your home looks like, if it's completely updated or it needs a ton of updates, we want to get top dollar for your home, and we need to have a strategy to go along with it, not just pull up a CMA and say this is what houses are for in your neighborhood, this is what we're going to do. We're going to have a marketing strategy that goes along with the pricing strategy, and actually have a full plan in place so that we can maximize your top dollar. Next, people are always asking, where's the opportunity, right? The hottest spots currently, based on November statistics by Megan Aller, North Glen and Green Mountain. So that's where you might see a little bit of competition. Also, there's a ton of opportunity in North Glen, especially for first-time homebuyers, to get into a detached home because there are so many of them, right? Floor plans are a little bit smaller, brick ranches, ton of them over there. And they have those backyards, right? Because they're detached for our dog lovers. I just read an article the other day that said Colorado homebuyers are actually basing more of their decision to purchase a home on their pets' needs versus their, any humans that might live in their house, which is a little crazy, but so true if you know anything about Denver. Denver and Coloradans love their dogs. It's funny because I've heard this said, especially by people who have moved here more times in the last couple months than ever before, which I always knew. And, as at my properties, I allow pets and things because I know that that's something that goes along with it. But when purchasing a home, this also comes into play. So that's why those North Glen, lower price point detached homes are absolutely hotter than, some of the bigger spots. If you're looking for the colder spots, we're talking about Layden Rock and Candelas up in the northwest side of town. These are often move-up sections of our market, right? They're bigger homes, they're newer homes. And so this is something that we definitely want to keep an eye on. And as an agent, I see that, first-time home buyers and more affordable options are definitely where the hot spots are, and these move-up options are a little bit cooler because, for instance, I'm personally in a move-up kind of demographic, and I personally like my 3% interest rate, and I personally like my home that we're in, and we can model rooms and make it work if we need to. But, my house isn't tiny by any means, but these are, that next step from 3,500 to 5,000 square foot homes and things like that. And so it doesn't make a ton of sense for me to grab that extra square footage right now because of my monthly payment and because of my comfortability in my current mortgage payment. So it also has to do with the market dynamic and what that target avatar or client like yourself is looking for. And so that's why we see the hot and the cold spots for sure. But what's that mean? Well, the colder spots, maybe there is opportunity. Maybe there is a little bit of opportunity for more, higher negotiation power and things like that in those areas. So that's something to keep in mind when we're talking about hot and cold spots. So before we look forward, we have to understand the common takeaways of 2023. Certainly we had the wild predictions of the lower interest rate. May 10th was the day, and the Fed was going to come out and inflation was going to be over and the markets were going to celebrate and the interest rates were going to come down. We were going to have a massive, Q2 in the real estate industry. Well, turns out May 2023, the rates skyrocketed to record levels that we'd seen in, the previous 10 years. And so that really put a damper and kind of put us in this kind of holding pattern from what I felt as boots on the ground, is the people that needed to move were still moving, and the first-time home buyers that were prepared and were, determined to get in the market were getting in. But other than that, people were relatively silent for Q3 into Q4. And so that prediction and that, listen to what everyone's saying, we're going to wait till May, we're going to wait till June, we're going to wait till July. And so that kind of took place, and that really defined our entire year, as well as continues to bear fruit as we move forward into December, right? And in December we actually did see what was supposed to happen in May happen, and so that's great. However, we still have the last 6 months of buyers really dialing in and trying to get creative and still digging their heels in. And now we see the rates come down a little bit. And so some of that creativity is going to be curved, right? And I think this is a really interesting point here, is that the interest rate came down, a quarter, half, 3/4 of a point over the last 6 weeks. However, I am actually not able to get the same amount of concession as a buyer because the demand has spiked, right? Couple houses that I've talked to, listing agents, we had multiple offers this last weekend, which is the weekend, 2 weeks before Christmas, which is usually dead period, right? 2 weeks before Christmas, everyone goes home, their trees are up, their lights are on, they're kicking up their feet and enjoying all the Christmas parties. Well, we did see multiple offers in the second weekend and third weekend in December this year because of this interest rate market celebration, right? And so I still think that the holidays are curving some of that demand, and now we're going to see how it really plays out, right? Are 34% still falling out? Are the sellers or buyers still digging in their heels? Because in multiple offer situations, you're not getting that big concession. So for instance, I had a client go under contract 6 weeks ago. He's closed now, but he was in the low 6s, where now with multiple offers, you're going to be at the par rate probably, unless you're bringing your cash to the table, which is a completely different decision than using the seller concession, right? And are we going to do that? Like, are we going to have that opportunity? Probably not. So maybe we're high 6s now, whereas before we could buy it into the low 6s and help with that monthly payment. And so there is two sides of this coin, because the buyers have gotten so creative and had to do it out of survival, right? And now we're at this point where, yes, the rates have come down a little bit, but when you really step back and look at it, 6.75 or 8.5 or whatever it is definitely still higher than 85% of the mortgages that we've locked over the last 5 years. So that's really where we need to understand the market specifically. And as your agent, that's obviously my bread and butter. And understanding that we're still, as buyers, have that little bit of power to be creative. However, now that demand's creeping in, we're kind of slipping more towards the seller and ultimate power again. So we'll see how it plays out, because I think, we are still seeing a little bit of curve in demand due to, the holiday. Right now, if these rates hold on through the holiday and come, the first weekend in January and so on after New Year's Day, I think we could see a huge spike, and we still lack inventory, although we're up high, but we could, all that ground we made up in the 16% increase in inventory in November could be quickly eaten up in the first couple weeks of January. So as we navigate this market, and now as agents, as we have these buyers who have to get creative, some buyers are a little bit behind the curve, and they're still going to be trying to make these lowball offers and get a deal, where that opportunity probably has sailed, depending on what the rates do. And I think what we'll see with rates is we'll have good wins, for 3 days, and then we'll give back a little bit, and then we'll have bad days where the rate goes up a little bit. And I think we're going to stay pretty level throughout 2024, but we don't need to predict 2024 too much here. But the point is, we have to be agile. We have to be ready to go, because even if the rates go down, on a Friday and we're celebrating, everyone's crazy, and its demand spikes a little bit, by Monday or Tuesday when we go under contract and they're locked, it could be a whole different story where they give back a little bit. So we have to be creative and agile and understand the volatility of the market, where it's at. And so that's absolutely huge. As for me and my plan moving forward, this is even more of an opportunity for me to sit down, get to know every single thing about your real estate goals, and help you truly build a plan to build wealth through real estate. And if that means, hey, we need to save a little bit of money, we need to build our credit a little bit, we need to do this. The real estate market will still be here. It's just what you're losing in order to gain, right? What are we paying in rent out in that 6 months that it's going to take us to, get that 825 credit score that's going to push us over the top, or whatever that is. And let's weigh all options. And so that's what I'm doing more than ever is, okay, what's the ultimate goal here, right? Where are we going? What information do we have? And it's hyper local to where you want to live, but it's also hyper local to you as a human and what your situation is. And there's no market report that's going to say, oh, it's definitely time to buy, or it's definitely time to sell, or definitely time to invest. It's a personal one-on-one conversation that we look at your goals, look at the aspects, and that's exactly what I do. And so if you're looking at buying or selling, as I mentioned before, definitely book a consultation, and let's look at all of the options, look at all the variables as it pertains to you, and absolutely make this market work for you in ways that maybe you're not thinking of as, the consumer. And that's what I love to do, and that's what I'm doing for my business moving forward. It's less of a mass approach and, do as many deals. It's more of, okay, let's manage portfolio. Let's get to, from point A to point D, and how we get there has to be strategic, and you have to have a plan, and you have to be willing to understand that the market is variable, but take advantage when the time is right. So I hope that helps. If you like what you heard, please subscribe, share this with somebody who's maybe looking at getting in the Denver real estate market. Bye-bye.